this is just getting set there. Okay, so the Dow made a recovery high just the other day, 26,277. Yesterday was the other day. If you're looking at my charts, you'll see in the Chapman Wave methodology for subscribers, I showed that we went to a leg F with a really good chance that if there was a pullback below 26,050, I think I said it was, we would be confirming a peak F with a Chapman Wave 5, and that should give a pretty good pullback. The chart on the right is the same thing. This is the 120 minutes Dow. And the one on the left, I've got the green is the 9-period moving average, 14 is the black line, and this thick light green is, in fact, the 20-period moving average. If you move over to the right chart, you'll see that the MACD is just about, let me just check. I think it's, oops, I didn't mean to do that. It is just about to, there it is. Cross, now it's still, yeah, the MACD is still slightly positive. It's really close to crossing negative. And let me just double check. Oh, yeah, it's at 0%. So this is going to be very important, because if the price goes below the 14-period exponential moving average, there's a real good chance that the MACD, the 9-period differential, that green line, will cross negative. And if that's the case, then we're looking at 25,950 as we see it right now, with a low today of 25,009, I think it was 30, I think it was 25,930. We're 20 points off that low. We can easily take it out. So this is going to be, this hour is going to be quite important, because we'll be able to look at it at the end of the hour and say, hey, if this is just a single leg A, there could be a little bit of a bounce, and then you could go to a B, and then you can't dismiss it. The 25,000, the 20-period moving average is a little faint. I'm trying to see it right now. 20-period moving average, if I can hit the right thing, there it is. At about 25,800 will become very important support. Okay, so that's that. In the daily Dow, I didn't mean to do that. Okay, in the daily Dow, what we're looking at is there's a V-shaped recovery, and this is been my frustration, in that the 1-to-1 short, or the 2-to-1, or the 3-to-1 short of any of the indices, every day there's a slight diminution in the price, and they do it through a recalculation. It's really frustrating, because we shorted the Dow right, I mean, you couldn't have been, I suppose you could have been 100 points better than that, but we shorted it the day after the all-time high, 26,951, based on the doji candle in the daily chart, a potential peak E that if it closed underneath the low of that day, it would be very negative. And then there were a whole series of Chapman Wave Roman candles. We got everything right. I wanted to hold this longer, because I don't think we're making new highs in this particular time frame, and it might be the whole of November, I'm not sure yet, but I just don't think we're going to the new high just yet. Yeah, we can go to 26,400. We can even, I'm anticipating that if the stochastic, which is in the daily chart, still strong, it's at, right there, it's at 94%. So we should get some kind of a bounce. Not only that, I got the Chapman Wave trend gauge, which flashed 2 days ago, correctly identifying that yesterday would see a 9 to 11 point rally in the E-mini futures that would help the markets, which it did. It flashed again yesterday. So my comments to my subscribers to my opening call was that there's a chance that we get this pullback, and then the market starts holding, and that somehow by midweek next week we start pushing towards a slightly higher high above 26,277 to go to leg C, and pull back, and then make it D. Maybe it's all in 1 week. It could stretch over 1.5 weeks. But that's my thinking. And if we start to close kind of in the 29,850 or lower area, this is going to be one aberrational move to the upside based on the election and a very oversold condition. So that was frustrating, because we got stopped out of we did take nice profits on the way down, but we also got taken out, so that we aren't in the, that what I was hoping would be a more intermediate term short position, holding through a longer cycle. I'm not complaining about, taking a profit and getting it right. I'm complaining about the fact that it isn't one-to-one. It isn't directly. I wish there was a direct correlation, mirror image in percentage and price to the long side, because that would make it a lot easier all around. Well, it doesn't work that way. So now we have to do other things. In the meantime, back at the ranch, I want to go through these quickly before we go to the break, because I had a lot of questions come in. Yep, there it is. There's the Chapman wave inside inside wedge. This dashed green line resistance, we hit that for 2 days. Now we're pulling back. Yeah, the stochastic and the MACD are still very strong. So I suspect there's enough residual strength to at least have another rally into early next week. We'll see. I mean, days young. We'll see how we close. We closed down 350, just wiping out a chunk of the gain of Wednesday. That'll not be very good. S&P. So while the Dow is down 0.89, the S&P is down 1.11. So the Dow was stronger on the way up, is stronger than the S&P and stronger than the NASDAQ. And on the way down, it is holding better. So the S&P is down 31 at 27.75. Little doji candle recovery high. Yesterday, pulling back. I don't know if we fill that gap very quickly. That's going to be very ugly action. But the weekly charts in both the Dow and the S&P, all of them, just suggest that we need more time. And I think we're into a very big yo-yoing, I call it a yo-yoing, sine wave move between a trading band, and I'd say that for the Dow, 26,400, and I'm pretty sure 25,000, 25,000, at least for now, 600, 400 should be the trading band low, at least for a little while. The S&P would be 27.55 to 27.47 as support, and on the upside, not much higher than we were, so 28.25. QQQ 123. This is the Invesco QQQ Trust Series. Lousy action, down 3.32 at 171.09, down to almost 2%. This is not ugly, and the weekly chart is really not very pretty. So let's go on to and here's another thing. In the E-mini that I show my subscribers every day, I also posted in the den, I'd said that there was a round number 28.18 high in this recovery, and the 120-minute chart, look, it went to a peak E, it pulled back, and now it's gone from 28.18 to today's low of 27.72. Ooh, that's a big move down. We're at 27.74.75 right now, really struggling to maintain some kind of support. So let's get out of that. Let's go to the IWM. IWM is the Russell 2000 ETF. Let me get out of that in the 120-minute chart as well. Yep, goes to a peak C, a little bit higher lettering in the Chapman wave methodology. It did go to 86% here as well. The technicals, at least on the very short term, were improving. So at 153.83, down 2.01%, 3.17 at 153.83, right on the 14-period and the 9-period exponential moving average. Wow. Weekly chart and monthly chart are really terrible here. What am I missing? No, okay, let's go to gold. Gold was down earlier. Where is it now? Down 16, almost $17. Peak G daily. Weekly is really waiting for data. Not good at all. So let's go silver. I think silver's the same thing. Gold was down sharply. Silver's down 2.17%. Very ugly chart. Oh, this is terrible action in silver. High-grade copper. High-grade copper is down 2.07%. Hey, this is not a good sign at all for the economy. And I do want to go to the dollar as we go to the break. Basil Chapman, Tiger Technicians Hour. Dollar is up 0.30 at 96.96. Outstanding action. We remain long the dollar from April. It is really performing well. Look at that cup formation.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So, as I said, the dollar is acting really well. I must say, really well for me would be if at 96.96 right now, in 2 weeks' time, we see it trading very solidly above 97.35. That would be a game changer, and I'll tell you why. Let me just see what Johnson & Johnson is doing. Johnson & Johnson rallying strongly, and today it's down just 7 cents in leg C. So this is very, I think over a period of time, many of these multinationals have started to work out the problems of the strong dollar in many ways. And I think you can see that in some of the stocks. Let's go to some of the, let's go to, UTX is probably a multinational. If you're looking at it and you're looking at it as some form of payment, you never know, but let's just say they get paid in dollars. This is an interesting stock because it went from 139 back in February down to 115 in May. And then it rallies sharply, and it goes to 144. That was in September. And then just the other day, it's back at 119.19. So I think that the dollar, how the dollar impacts a lot of the currencies, a lot of the European markets, I think if you get to the 97, something else is happening. And I'm not sure that that's a big change, a percentage change from the 95s that it was just the other day to the 97s. I think that's going to be a bit of a handicap that many companies and countries are going to have to try to see if they can ameliorate the negativity for them. So this is going to be a difficult time. I want to go to the TLT to say that the bonds rallied quite sharply, up 75 cents at 113.27. But let's put it into perspective. The monthly chart of the TLT, I wonder if I can go to the, yes, the monthly chart of the TLT made a very large arch formation, and within that, there was an H pattern which took out the left side, 116's multi-times hit over the period from the low in 2017. Now we're trading way down. We're at 113, having gone to the 112s. If you look at US, this is the bonds, a continuous 30-year continuous bond contract. It's in a leg D to the downside. It's gone below the previous. Now remember the arch formation? The rule of thumb in the Chapman wave is that if you take out the left side low, you have one, maybe two. There are very rare instances where it's actually 3 times that you go below the left side low of importance, and that in this case, it's continuous contracts, so the price keeps changing. So the low's around about 139-ish area back in March, and you had it back in December of 2016, and then you went just under it to 138, 1830 seconds that was in May of this year. And now you're actually down. This is the second month you're below that 116 level on a closing basis. Sorry, 116, I'm looking at the wrong contract, 136.16. Yes, a lower low. So this is going to be important. You've got another 1 month to go, December, to really break decisively back into the 140, I won't say 141, that's nothing. You really need to get to the 143, 145 area. And that will save the day. But if you look at the interest rates, look at this TNX. TNX, there we go. TNX is in a leg D. It hasn't made a peak yet for November. So the high of October is 32.48. The high this month is 32.39. Yeah, it doesn't sound like much, 9 points difference. Call it 10 points because you want a new high. But it's hanging up there at the top, and the MACD is good. The stochastic is improving at 88% on a monthly chart. So it seems to me that yields are saying, please don't rule us out. We are acting very well. We are very strong. We have no intention of coming down unless something dramatic happens at the Fed or somewhere to say, hey, economy is really weakening now. If you use my cash indicator, CTAS, down at 177.67, having hit 168 low after making a 217 all-time high. Syntas, this is not a good sign. If you go to Amazon, which has held way better, but still quite a bit below the all-time high of 2050.60, trading right now at 1712, having hit 1476 just a week and a half ago. Not very good. I don't know what it's saying about this season coming up, but I think the competition is going to be intense. Let's look at the RTH to go with Amazon. Let's look at the retail sector. Look, Market Vector's retail sector is holding pretty darn well, considering that Amazon has been clobbering them for a couple of years now. RTH is trading at 107, made an all-time high of 112.23 back the week of the 5th of October, plummeted down just under 100. Now it's at 107. It's right in the middle of the range. Right in the middle of the range. And that monthly chart is still, the MACD is still strong. The stochastics at 91%. I am going to make a claim here. And the claim is that when the chips are down, this season, when Christmas ends, a whole holiday season ends, Hanukkah, Christmas, whatever we got, Amazon has not maintained the same growth as it has in other years. Still makes a ton of money, but doesn't keep the same growth. Expenses are probably catching up, certainly. I mean, when you get, I know I've had shipped to me stuff that is just one little tiny thing, like a little mouse, right? I like these tiny little mice. I like them. They just fit the hand nicely. And so mice arrives, or restring my racket. So I'm ordering one or maybe two strings. Got a pack that you could normally have an envelope. It comes in a special delivery. Look at the expense. I mean, what a wasteful era we're in. You know, you look around, you've got a packet within a packet, wrapped up in cellophane so it doesn't break, and then a box that is very well sealed. And then you have to just throw it away. You go to the supermarket, you forget to take your bag, and And that's why I think that Amazon is in a little bit of trouble here. And that's why the retail stores, I think, are going to do better. It seems right now that they're holding very well. Not all of them. Let's see what Macy's is doing. Macy's right now is, Macy's is just down a penny and a beautiful leg up. Oh, look at this. This is leg C in the daily, a buy mode in the daily. The weekly chart made a peak D at 42, just under 41.99. Do you realize it was at 17.41? It was horrible, about 25 this time last year, 24 actually. This is really good action. So I think there is a comeback of sorts, but at the same time, I think we've got selective recessions all over the show. And that's going to show up. I think it's going to show up. And it's going to show up by making sure that the Dow doesn't actually get to an all-time high in the very near future. Does it do that before December the 31st? That's a big question. I'll have to let the week play out. But we want to at least try to play the rallies, and I think we'll fade it again on any big move up to a new recovery high. That's the way I'm looking at it. A bunch of questions came in. Well, let's look at some of them. Let's look at our Boeing as always. And I'm forgetting crude oil. Crude oil, about 9 days down. So Boeing is just down 3. It's holding quite nicely. Let's look at crude oil as we go to the break. Oh, my God, another red candle, down 71 cents to 59.96. When I said I had a sell signal at 76.90, a peak F.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So Technical Friday. So let's do a little technically. I'll get to some of the other questions, but I'll deal with them as we move along here. Question here in the den was, Basil, can we dip to S&P 2200 and still be considered to be in a mega bull market? That's a very good question. And the reason why I've made such a big deal about the monthly charts is that if there's a little more time used in the monthly charts, I probably won't have any choice but to think that the next big move up is starting fresh in the monthly with a new leg A, B, C, D, E, maybe an E. But most importantly, I need to see where we hold. Remember, I talk about an internal low and a residual low. I believe now that I can talk about the 2603.54 low in the S&P on the 29th of October as an internal low. The fact that it is not at 2850 right now, but 2773, says that next week is going to be absolutely critical in the timing of this, because a V-shaped pattern will occur if there isn't just a nominal new high above the high of yesterday. No, it was the day before. 28.15.15 yesterday made a peak, a silent candle, silent doji candle, peak B. Yes. So the answer is, if in the arch formation, we actually just use time and we do not at all break, I would say, let's say we fill the gap, but we don't break under the 2685 high of the candle of the 30th of October. In fact, we're above it and we don't even break 2700. And then we start into the 2850s. I have to consider that this is on October the 20th, 1987, the day after that 508 point smash to the downside, to conclude what I thought would concluded a sell mode in daily, weekly, monthly charts. And I went online from my hotline and I said, I believe within 18 months we'll make an all-time high. This is the potential for the candle here with another because we've already had a rectangle breaking to a new high. That means that you've got to consider, look at the weekly chart, that the rectangle pattern is a viable pattern. That completely breaks down if we go under 2603. So my thinking here is that there's been enough of a liftoff from the lows that were made October, the whole period between October the 29th and the next day, and the next couple of days, and the big move up, that some of these stocks might not go back to those lows, and they could have started a pretty decent move to the upside. We're trying to enter some of them right now. On the other hand, a really decisive break below 2600, I have to say, whoa, maybe you got to rethink your thesis. What on earth could get the market to have another mega bull move? When I say mega bull move, I mean wherever you go, there are people talking about how much money they made. In one day, I made more than I given up my job, because that's what you want to hear. Just like in 2000, that's exactly what was happening. I don't believe that this 10-year bull market can just end in a fizzle like it just did. It just, emotionally, I've never seen a bubble ever just kind of get a little pinprick and then kind of fizzle out. It always goes to an extreme, and I don't see the extremes yet. Whether it is going to be marijuana stocks, let's call it a sector, whether it is the Bitcoin, whether it's a sector, whatever it is, in that final phase, we're going to have something. In 2000, the NASDAQ, everyone called the NASDAQ the NAS, like it was their best friend. Well, it was for a little while, until the NAS really turned around and gave them an 85% down beating. So until we get that kind of buddy-buddy with the market, and I do mean everybody, I mean that it's the person you know the best, who's never talked about the market, who doesn't even know about it, market doesn't even enter their vernacular. You're an aunt or a grandma, whatever it is, or a grandfather who says, I'm never going back into the market. When they turn around and you find out that they actually went from the safety of bonds into not just the Johnson & Johnsons, but they went into whatever is the most speculative stock at that particular time. Amazon is trading at 3,557, whatever it is, whatever they go into at that point, that's what major market tops are like. And I just don't see that this is that kind of a top. So I still believe we got another big move to come. How you plan, how we prepare, we needed a period of consolidation. In many ways, just look at the Dow, look at the S&P, look at many of these indexes. They've been consolidating, even though there were recovery highs this year. Really, it's true. One big consolidation with just a handful of stocks taking it to new highs in each one of those indexes. So I hope I'm covering this in a way to say, I'm not here to say the S&P is going to 3,357.57 on November of 2020 or 2021. I am saying all the conditions here are being met to say that we've had an internal low, there should be a residual low, it should take some time, and that next week we should, based on the stochastic being so good at 87% and the MACD being so good, we should try to get back into the most recent highs of yesterday or the day before. And that's really what I'm looking at. All right, I couldn't be clearer than that. In other words, short-term trading, long and short, I think is viable right now. And at some point we make some kind of a low, there's some kind of real bad news, but it's an internal low that goes to a residual low, earthquake, and the aftershock comes in. I still think that's what I'm looking at. All right, another question is Boeing. I did that. Boeing, I said yep, up a little bit. DAX down, DE, DOW. This is the Dow Jones DAX. I don't get the DAX index, but this is exactly the same as the index. It's just a different price. Oh, come on. DEDOW, not DEQ. Okay. Yeah, down 0.17%. 378. So this is that arch formation. Doesn't look very good. Just not a good chart formation at all. Next question I had, XLI. Let's go to the XLI. I don't know why I have to always be reminded about it. It sort of goes off my list. XLI is not anywhere close as good as the Dow. Remember, the Dow is not the industrials anymore. It's called the Dow Industrials, but the Dow is really a conglomerate of some of the best sectors and the best stocks within the sectors. Got to get a little sip of tea. All right. XLI trading at 86, down 86 cents, 72.31, down 1.17, a little worse than the Dow, a little worse than the S&P. Yeah, I don't think this is a great sector right now at all. I think it will become a good one, but not right now. So, a quick question. Yeah, could I look at the E-mini? Oops, I did the wrong thing. There it is. The E-mini right now is trading at 27.78. It made a low of 27.71, round number. It's in leg B. Is this the move that starts the intraday E-mini? Well, we've already had the E-mini do over a 9-point rally, and then it started to come down again. So is this a move that can take the E-mini? Have we seen a low that probably won't be tested on Monday? I can't say that right now, but I believe looking at some of the stocks and the deep declines in some and yet very shallow declines in others, I'm inclined to think that we might not have more than 80 to 100 points on the downside from here before we attempt another rally, or it could have started already. So the E-mini at 27.78 mustn't break under 27.69.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at tfnn.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked about KSU, which is Kansas City Southern. It goes to a 121s area, double top back in August and September, and it goes all the way down to a low in the 90s. Right now it's at 102.49. You can see by Chapman automated a repellent line 104.42, and it's pulling back from there. But the technicals are starting to improve in the daily. So this is very important. If KSU is able to get to 105.70 anytime in the next, I would like to say 3 to 4 sessions, rather than to take out 101.70 support, that would be the start of at least attempting to see the rails, in this case, KSU, at least do better. A question about Goldman Sachs. Goldman Sachs has 236, 238, and 245 resistance levels. If it can take out the 233 green moving average, you can see here in the automated Chapman wave, there you go, and the high was yesterday 234.06. It fractionally touched that level of the 200-period moving average. Now it's pulling back, but it's holding the 9-period. It's at 227.93. I'm watching this closely because this is one of those that's going to tell us a lot of information if it's able to break above and not go under. I think it must hold 224s. So that's Goldman Sachs. Question about, where was it? I'd like to just see Boeing under my projections here. BA, yeah, that has all the way to 383 as resistance, but that 329 held beautifully as support. Look at that. I just think that Boeing is in a trading band. I just see it maybe a little higher, 378 maybe, and then it'll probably hold 355s if it pulls back. I think it's just in a trading band, consolidating huge gains. XLP, now XLP is going to be important. Why? Because that's a consumer staples spider fund. It's testing a whole bunch of resistance levels. In fact, it's gone a tad above it. Today it went to 56.90, 56.67, 56.46, 56.44, and there's another one there, 56.38. There are 4 resistance levels, and it's bouncing, bumping up against it. The MACD is at 96, excellent. Sorry, that's stochastic, and the MACD is very strong. I think the XL, I've been talking about this for a while. Consumer staples is holding really nicely. That can go a little longer. PPI was higher today than everyone expected. So producer prices. I got to watch this whole thing because you know we're in a different era to where we've been almost ever before, not ever, but maybe for decades, because of what the Fed is trying to do. And as I say, I think we've got a rotating recession. I call it a slowdown. Recession is a too deep a term going on. So if you look at the what was it? The VXX I was asked about. VXX is at 33.66. It only went to a peak. If I call this double top of 39.48 and 39.48 on the 24th and 5th of October as a potential red Chapman wave phantom peak, then this peak D, which the VIX indexes did, it went to an E actually, says that this is in a sell mode and that any bounce in the VIX should have a lot of resistance at 33.61. The VXX, which is the S&P 500 VIX short-term ETF. I'm looking at this and saying, I don't know if it's going to go much further. I think it's going to come back. So we'll see where it closes today, because the VIX index on a weekly basis has pulled back very sharply, but is still in the weekly chart, still well above the 200-period moving average of 14.55, the daily of 16.11, I think it is. Let me double check here. 16.71, let's say, and it's showing right now at 17.58. So this, and it's holding really quite strongly. If you look at this VIX index, it usually pulls back deep after a major up move. So I'm thinking that I'm staying with my theory. So the VIX index, be careful. If you're in it, I would take a little bit off and then hold over the weekend. If we close lousy, you definitely want to hold through the weekend. So, but yeah, the VIX at 1754 is showing no fear. So one quick thing I wanted to do here before we start running out of time, we've gone to a leg C in this 2-minute chart with the technicals improving and the stochastic holding flat at 82%. Every other time, every rally we've had today, the VIX, the stochastic ran up and then pulled back very quickly. If the stochastic at 81 is able to hold steady above 80% in this move without breaking to 78% in each 2-minute move, maybe we've seen some kind of at least a shorter term low on the day. Intraday, I'm talking about 2-minute chart, don't forget. So this is going to be very important. All right, let's go to the crude oil. I didn't, This is the DZZ. This is the inverse gold ETN, I believe it's called. It is the Deutsche Bank, what's the full title? Deutsche Bank something or other. Deutsche Bank, DB Gold, I don't know what the DB stands for. DB Gold Double Short ETN. And it's trading, it hit 650 resistance. The high today is 650 exactly. See the automated Chapman wave 650 right there? So we'll see what happens, because if this DZZ, because gold pulls back further in the rest of the day, if the DZZ closes in the 663 area, well above this resistance, then it's going to try to fill the gap by Monday. Oh, you got to watch that very closely. So a couple of questions that I didn't get to. I did that XLI, XLP, Pfizer, PFE. Let's look at it in this particular chart right now. Pfizer trading at 57 cents at 44.42. Oh, I want to look at this on my regular charts. Pfizer, PFE, because Merck went to an all-time high. Pfizer's lower than it was. I've got it. I couldn't count it any other way, except for those restarts were really important. Almost made it, but it didn't. So it's at a peak C, holding very nice. Almost looks like the dollar chart. And the monthly chart, that's the weekly. The daily made a peak E on the 9th of October at 45.81. Pulls back very sharply into the 41s. Trading right now at 44.43. You know, there are places to hide. I think today we actually found one. We bought it at the low of the day, and it's rallied really nicely off our entry point. One of those didn't work. 2 of them are working. The third one we've just picked up on the long side. Day is so young. I don't want to get into any other area, but to say, yeah, I think you can look at buys at this particular phase. The downside smash was really intense. Some stocks were 15 to 22% down. They should have at least a relief rally of time, if maybe not price. But look at this. Pfizer is acting very well. And Merck Merck, I know someone who's had Merck for years and years, waiting for the Chapman wave D and E. It did that back in 2016, pulls back quite sharply from the peak E in 2017 and about 66, runs down to the 50, about the 54 level. Now it's trading at 75 in a brand new leg, A or an F in the monthly chart. And this weekly chart, this is not the way G's are. This is really unusual. Oh, this has got a Chapman wave flat base restart. I don't want to talk about it other than to say Merck is at an all-time high. Outstanding action. The PPAs, that is PPA is the. This is not the. This is PPH. PPH is the Van Eck Vector Pharmaceutical ETF, holding very nicely. I'll be right back. Dow's down 321.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
And folks, don't forget, Steve comes up. We've got Dave White. We've got Tom O'Brien. Happy birthday, Tom O'Brien. And we're looking at the Dow now down 210. What's going to be, you see this, the E-mini, you see the way it's made a little V-shaped bottom here. Again, it's done it a few times. Look at it, once, twice, 3. And now this is the one that either this has legs or it doesn't. And if the E-mini breaks under 2772, it's at 2778 right now, under 2772, watch out. Could be a horrible close. But wait a minute. I've got the Chapman wave trend gauge still flashing. We've used up part of it. I don't know if it's going to fully have a pretty decent rally. But if that's the case, if at any point at 2778 right now, 2779, if the E-mini is starting to trade at 2785, that's 6 points, it's about 60 down points higher. If it does that, and closes instead of the Dow closing down 350, it closes down 135 or something like that. I'm not sure it can do that. I'm just saying if it's able to do that, that's going to be really important, because today was an opportunity in some areas. If you missed the big move up, you couldn't get the lows. It's impossible, but you could get the retracement on some of those positions with a nice risk reward. That's all I'm looking for. I've got like a 1%, less than that in some cases. Stop. Either it's going to be right and just perfectly timed, or it's just wrong. And if you're wrong, you can keep coming back on a very small loss like that 1%. I'm prepared to do that. This is the most difficult time, especially when we're looking at a trading band forming. I'm not sure just how much there is on the upside, but I suspect there's enough residual strength that at some point we're going to see some pretty nice jumps to the upside, and then it gives it back. And will it be higher highs and higher lows, or lower highs and lower lows? That's going to be the big question. So this is a very important moment. So check out my opening calls, my daily newsletter, very comprehensive charts. We look at the charts. I show you every day. I show exactly what I want to see, why, and let me just see if I can get one of these going right here. Yeah, it is. So here it is. Just as we're about to go out, I'll show you. Maybe I will, maybe I won't. Yeah, this is it. I'll show you. This is the 120-minute chart. See that peak F and a Chapman wave 5? Said, watch out. We could be pulling back. We're expecting that, and I gave the levels to watch. Very comprehensive look at the markets. Have a great weekend. Stay tuned for Steve and Dave and Tom. I'll be back Monday. Have a great weekend. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.